let's talk a little bit about this market. The S&P goes from strength to strength. It's been driven by tech recently. Talk to me about the risk and reward here.
Yeah, so look, I want to first start with earnings season, if that's okay, Guy, because that's the number one thing on my mind, which is, we went into earnings season wringing our hands, a little bit stressed out around these three pressures, like, labor shortages, supply chain disruptions, and overall pricing. And then we've come out mostly on the other side with better margins and better earnings than consensus expected. So we should feel pretty good. But the big thing, I think, on everyone's mind right now, the second part of earnings, is really guidance. And this is what I think most investors are focusing on. You're seeing this dispersion in the equity market, despite the fact, as you point out a moment ago, that we keep on making new all-time highs on the index. This dispersion is coming from which companies are increasing their guidance and have more optimistic 2022 outlooks, and those that are cutting. And so I think we're going to see more of that. The market grows higher, but at the same time, there's going to be greater differentiation between those companies that have better prospects for next year and those that have just kind of sort of topped out in terms of their earnings growth.
So where does that leave something like big tech, Kate? I mean, it's good to see you, by the way. When you Google at $2 trillion now in market cap, what do you do with the big tech FANG names?
Yeah, Alex, it's a good question. So I think we're going to see a little bit more of the rotation that we experienced really on Friday and some of the last trading days of last week in terms of, the restart, reopening economic winners, whether that's on the consumer side or on the corporate side, returning to office winners. At the same time, that doesn't spell the end, I think, for big tech and for some of the most important themes that are going to really, I think, drive the market higher in 2022, which are around digitization and cloud adoption and, overall increasing technology enablement across all these industries. So I have to say, as much as I'm sort of constructive on the overall economy and like some of these restart and reopening plays into year end, those that have given better guidance, for example, I'm not fading any of my tech positions. In fact, we're continuing to lead into some of these secular winners.
Do I stay fully invested at this point?
100%, Guy. I would not take money off the table. I think there's some room for some of these sort of micro rotations, as I mentioned. Take a good stock of what companies were telling us over the last couple weeks and make sure that you're positioned in those companies, sectors, and themes that can really produce enduring growth in the next stage of the economic cycle. But don't take money off the table. Stocks are still the most interesting investment and perhaps the one that will offer the best returns, not just in the fourth quarter, but into 2022. So stay invested, resist the temptation to take a bunch of profits and hold up for the next 6 weeks.
So, Kate, how then do you take into account, COVID cases rising in Europe, for example? In Germany, we're having that fourth wave. China keeps having that zero tolerance policy, and I can imagine that's only going to make the supply chain problems even thicker and chunkier. How do you look at those kind of headlines right now? I feel like a year ago, the S&P would have lived or died by that.
Yeah, it's a great point, Alex. Look, I'll be honest. Like everyone else, I'm having a really hard time predicting the future path of COVID, but you made some really interesting points in terms of where we've seen increase in cases and China's zero tolerance policy. I do think the Pfizer news, combined with the Merck news, a little bit earlier in terms of, medications that infected people can get that will allow them to, at least reduce the incidence of hospitalization and certainly take off death from the table, does encourage people to return back to more normal activity. So despite the fact that we're seeing this uptick, I think there is a broad-based belief that we can return to more normal activity in 2022. What this sort of means for supply chains, though, if demand remains really strong, is left to be seen. I will say, as I mentioned at the beginning, I felt pretty encouraged by how well companies managed supply chain issues in the third quarter. Companies did a pretty good job here. I think in the near term, we'll see certain industries, some of those bottlenecks relieve. But I think over the medium term, what I'm also going to be watching is what are companies spending in order to prevent this type of issue from happening again in the future. And that expense, may lead to a little margin erosion, but I don't think we're calling the end at this point. It's something interesting to watch, but perhaps not as scary as it was pre-earnings season.
Kate, what is the trade out of COP26? Clearly a huge amount of money heading in the direction of sustainability. How do I figure out how to invest? Or do I just say, you know what? It's like drinking from a fire hose. There's just going to be so much liquidity coming into this space. Everything's going to go up. And as an addendum to that question, how do I play the president's infrastructure plan along the same sort of lines?
Yeah, so Guy, a lot of the conversation has been that some of these sustainability and ESG geared companies have already run a phenomenal amount or trading at what some would suggest are premium valuations, and maybe the trade is over. I think we are in the first stages of a multi-year, perhaps multi-decade investment in renewables, in alternative energy, and carbon neutrality. We hear this from governments. It's playing out in some companies, but there's, I think, a lot more opportunity and a lot more upside to come. You know, one of the things that I'm really focusing on in my climate and sustainability trades is actually looking at the full supply chain. So not just, say, looking at, you know, an automaker like Tesla or something that has, you know, a huge amount of EV market share, but also looking at all the suppliers, from the batteries to the raw materials to the chips that go into enabling that technology. So I think there's an opportunity to diversify around sustainability. I do not think this investment or theme is over at this point. And we're going to get some wobbles based on some premium valuations. But every policymaker around the world has given us the same message. And I think we need to hear it and put that money to work.